All right. Thank you everyone for attending our webinar today. Today we are going to talk about trading using the multiplication strategy, the strategy that I'm using personally on my live trading accounts, the account that I'm sharing on my Instagram account. And my name is Yazan Shakfe. I am the Chief Market Officer in One Trading Markets. One Trading Markets is a global financial broker with offices in UK, Dubai, Istanbul, and Hong Kong. Actually, this webinar is designed for people who you're supposed to have a brief background about FX trading or the financial markets trading in general. So we're going to talk about the directions of the market and the scenarios that you can use in this strategy that we are using, which is the multiplication strategy, and how many people use it in a wrong way. Actually, multiplication is well known. So many people use it, even if you don't know, but maybe you experienced it before. Now I will explain to you how. But I would like to shed light on how to use it in the right way. Actually, it's more than managing the positions rather than strategy itself. Now you can see in the comment slides how this is working and how this is managing your trading position. And we're going to share with you the correct formulas that we are using. And at the end, we're going to do some live examples on how to use this strategy. Anytime, if you have any questions, just share it with me using the question button, and between each and every main point, I will have a look at your questions and I'll make sure to answer them all before we finish this webinar. So let's start with the directions and scenarios. We all know that markets move in trends. Trends mean even the market in overall is moving up or down or sometimes move sideways. So when you have an identified trend, so you can use your strategy for entering any strategy that you're doing, using any indicators. The one that you're using, you can use it for to enter the position or to enter the market in using any position. Multiplication will follow in case the market goes against you. All right. Sometimes also if it's unidentified or like identified but not confirmed trend, also you can use your strategy and with multiplication. If there is no trend at all and nothing is identified, you can use multiplication and hedging, but I will leave this part for later so you don't get confused. So for now, I want you to focus on two main points. If you have a trend, whether it's confirmed or not confirmed, you can use this strategy. What does this strategy mean? Sometimes, for example, when you enter a buy position or a sell position, we know that short selling, when you are selling a product and you are expecting the market price to go down, so then you make profits when the market is moving down. All right, so sometimes you buy or sell, like this example, and the market goes against you. Instead of going down, it was going up from A to B, and then from B to C, and from C to D. The more the market is going against you, the more losses you have. So what people do is they do another position in the opposite direction, like another position, another buy or another sell position, just to average the price. So for example, if you were at point A and the market goes to point B, then you take another position just to average the price. In this case, your average price would be anywhere between A and B. So in this case, if the market go back to A, you will be in profit, not break even if you don't, in case you didn't do anything. And the same from B to C, they do another position just to average more and more. Many people do it without any main calculation. You can see in the example that you sell 0.1, but when the market goes to B, you sell 0.3. Why 0.3? There is no reason. They just put random number, and then from at C, they put 0.8. So having the averages, when you are averaging in entering the market, this is the key. You have to know exactly when and how much you should do in averaging. When you are doing multiplication, you should always do double the previous position. So let's say, for example, the first position was buy at 0.01. And if the market goes with you, this is super. You put like your take profit, let's say after 15 pips. If the market goes for it, that's perfect. In case the market goes against you, that means if you were buying and the market went down 15 pips, in the multiplication strategy, you do another position, which is double the previous position. So you buy another 0.02. In case the market go against you, again, another 15 points, you buy another position, which is double the previous one. So the multiplication means you always average with the double of the previous position. Okay, this is the first main idea of doing the multiplication. So first position 0.01, second position in case the market goes against you 0.02, and then 0.04, and then 0.08. You see, it's always double the previous, and then followed by 0.16, 0.32, and so on and so forth. Okay, so it's always, it's like double or nothing. Okay, this is the strategy that you are entering the market. The market is always noisy, and you have always to make sure that you control the movement. Okay, the basis of this strategy is that the market always, for every trend, there are always a reversal wave. Even if trend movement is too sharp, even if the trend movement is too sharp, if the market is going high too fast, there must be a way of reversal, because we're human. People who are buying at certain points and they saw who were buying at certain point and they saw some profits, they will definitely sell just to realize their profits. So these kind of selling will make a reversal of the movement. So this is what we are looking for in using the multiplication. So in multiplication, we are doubling the positions because we know at some point there must be a reversal. And when we have this reversal, we need to have a profit at the end. So how do we do it? Let's assume we entered a sell position at point A. And let's assume we sold 0.1 lot, okay? And we put a take profit, let's say 15 points down. We all know that when you are selling, when you're doing short selling, and the market is going down, you're making profit. So we have two scenarios here. Even the market will go up or down. We want it to go down in this case because you want your position to make profit. So let's say from point A, this didn't happen. Instead of market going down, it was going up. So I just make a formula saying that every time the market is moving against me with 15 pips or 15 points, I will do double the position. So if I was in point A, I sold 0.10. In case the market go against me 15 pips, I will do another sell, which is double my previous sell. So at point B, I do 0.20. Let's say, again, the market go against me from B to C. With the 15 pips, I will do again double the previous position, okay? And again, let's say from point C to point D, the market also goes against me. So I will do another sell position, which is double the previous one. And every time I do another position, I move my take profit 15 pips nearer to the direction. So when I was an A, there was 15 pips down the point A. When I reached B and I made 0.2, I put my take profit at point A for both of the positions. in case the market goes from B to C, when I take 0.4 position, I have to move my take profit from point A to point B. So always the take profit for all of the positions that I'm opening has to move with me. Every time I'm adding a new position, I have to move all of the take profits for all of the positions by 15 pips. Okay, so in this case, what will happen? Let's say A to B, in my first position, I sold 0.10. The market was against me, so I lost $15. From B to C, I already took 0.2. Okay, so now I'm having two positions. So the sell 0.1 now becomes loss 30 because it's double the number of pips. And with the sell position of 0.2, I'm losing now 15 pips. By 0.2, it will be also another $30. Sorry. From C to D, I'm also losing more, but I put another position. So now I'm having a loss $45 in the first position, which is 0.1, because now I'm losing 45 pips. And with the other one, which is 0.2, I'm losing now 30 pips, so $60. And in the sorry, and in the third one, which is 0.4, I also lost 15 pips multiplied by 4, which is $60. Let's assume that from point D, the market reversal happened. Okay, I'm doing now my take profit at point C, which is same as E, which is explained here. The moment the market go against the trend or in favor of me with 15 pips only, I will be in profit. Why? Because the position that I'm opening, which is the 0.8, is now giving me 15 pips profit, which is $120. The sell of 0.4 will be break even because the entrance and exit of the position is the same. And for the other two positions, I'm having a loss of $30 by $30 because I'm back, the market go back to me in favor of my direction that I wanted. So in general, the market was going against me for 45 pips and then back to 30 pips, but I ended up having profits. And this is the idea of how to use the multiplication. Multiplication has to have fixed amount of pips where I'm doubling, and also it has to be consistent. I cannot, for example, point A to B, I do double the previous figure, and then B to C, half the figure, for example, half the number of losses. In this case, when you are back D to E, maybe you will be in losses. So this is the idea of having the correct calculation of the multiplication strategy. Is it clear? Anyone has any questions so far? Okay, let's just now show you an example on the platform. Okay, so this is, for example, my live account. You can see that, let me open the pound dollar. Okay, and this is a live account, by the way. So you can see here that I made a buy here. Okay, my take profit was up, but when the market go down against me with certain points, I made it at 60. When the market go against me for 60 points, I entered another buy and I shift my take profit. Now it becomes at the entrance of the first position. So I started, as you can see, with 0.01 at price at 1.4173. Okay, and then when the market go against me, I just made another buy, which is 0.02 after 60 pips. and the take profit now becomes the price at the first one. So in this case, if the market go with me now, I will make a profit with the second one, with the second position, and the first one will be break even. So the total will be a profit. Let's assume that the market go against me again with another 60 pips. I will add another position, and I'll make sure when the market make a reversal for my favor, I will end up having a profit based on the calculation that I'm doing. Let's just now open a demo account and do it together. The entrance could be anything. I made it very simple in my strategy. I was just comparing two moving averages, one of 60 minutes and the other one for 15 minutes. So for example, for now, I will just have a look at the euro dollar, for example, just to give another example. So euro dollar, time frame 1 minute, I will add two moving averages. One is for 60 minutes. I will color it with red, and it's simple moving average. And the other one is 15. How to add the moving average? Simply from the indicator list, you go to moving average and you select the period, which is 15 minutes, for example, and you color it the way you want. And there we go. So the entrance is simple. You can use this one or any other scenario you're doing, okay? My entrance signal is in case the yellow line is above the red line, I will buy. Simple. I'll buy like 0.1, for example, which is $10,000. Okay. My take profit will be, let's say, 20 pips, which is 200 mini pips. Okay. Now, in case, now if the market go for my favor and had 20 pips extra, let's make it 10 pips easier. So we enter at 1.2121, I'll make it at 1.2131, okay? So here it is, here is the take profit now. Let's say that the market, instead of going to this target, the market go against me. 10 more pips, I need to do double the position. So what I will do, I will put a pending order from here. Instead of market execution, I put pending order and put 0.2, which is double the previous figure of 0.10. And I will buy at a price of 20 pips below my previous price. So I bought before at 1.2121. I will make another buy at 1.2111. Okay. So now you can see it here. It's not confirmed yet. The position is here. So in case the market go down by 10 pips, I will buy again 0.2. But remember, when this order is activated, I need to move my take profit. So this existing take profit should go down by 10 pips. So this take profit should be adjusted to 1.2121. And this one, of course, will be at 1.2121. So always the take profit, in case I'm buying and the market is declining and going against me, I need to lower my take profit every time I'm making position. I'm lowering it with the same number of pips that I am multiplying at. So in this example, I'm multiplying every 10 pips. So whenever a new position came in the market or got activated, I need to adjust my take profits again and again. Let's assume that the market go to 1.2111 and continue going down. So what I will do is I will make another position with double of the Last one got executed. Let's assume that this is executed and it's in the market. I will straight away prepare another one for my multiplication. So I will put 0.4, 10 pips below this one, so which is 1.2101. 1.2101. Okay? Here it is. So let's assume this one got activated and becomes in this list, which is in the market. I need to adjust the take profits, reduce them all by 10 pips. Let's assume another one got activated. I need to adjust all the previous 3. So always the 3 or all the positions that I'm having, it has to be adjusted in terms of take profit so we can get back to our strategy. Is it clear? Is there any question? Okay, awesome. So there are some potential problems with this solution or with this strategy. There is no perfect strategy in the market. The first problem with this strategy is the emotion. So many people, unfortunately, they don't do it continuously. Sometimes they say, you know, maybe the market will go like 60 pips instead of 20, so maybe I will double at 60 pips or something. But what if the market went 20 pips and then bounced back? In this case, you're losing this potential, this opportunity. So always be consistent. So the continuation and consistency and the persistence of this strategy is important. Okay, so this is the first thing. The second thing is the execution. You always have to know from the beginning when to multiply and how to multiply. For example, if you started with multiplying at 20 pips, you keep multiplying at 20 pips till the market go in favor with you. Okay, no changing at all. The third thing is the use of capital. You have to balance between the number of lots you're entering and your capital. If your capital is big, then you can start with big number. If your capital is small, then don't risk and start with big number at the beginning, because multiplication is always doubling the last figure. So sometimes you reach a high number of lots. So my advice, if your capital is small at the beginning, try a very limited beginning. So 0.01, which is the minimum. Okay, so in case the market go against you with like 100 pips, 200 pips, you can still have more capital to put more lots, because the more you can persist, the more you can sustain when the market go against you, the more you will make profit when the market reverse, because the market will definitely reverse. There is no market in the world keep going one direction forever, and this is a fact. Okay. This strategy, I'm doing it using an expert advisor. The one now I explained it to you was like manual, but I know that manual, sometimes you're missing 2 pips from here, 3 pips from here if you're not monitoring the market on a 24-hour basis. So that's why we applied this strategy using a robot which is expert advisor, a robot that you can implement on your MetaTrader 4 in association with One Trading Market. It's working only on One Trading Market servers. And I'm just putting my formula. So I put the formula of comparing 15 minutes moving average with 60-minute moving average. As I told you, if the 15 is above 60, I buy, and vice versa. And I take profit at 15 pips. And in case the market go against me with 15 pips, I will do doubling again and again, and it will automatically adjust the take profit to be 15 pips from the latest trade taken. I will explain to you how to add it. So let's see now. I will add it to the Canadian dollar Japanese. Okay. So when you have it, which is here, it's called Yazan Chakri, you just drag and drop. Okay, so here you have the values. So here the MA period, which is 15. I put first one 15 and second one here 60. You can see. Okay, and here the multiplier, which is like always take double the positions, and the start lot. So I start with 0.01, and the take profit in pips, I make it in 15 pips, and in case the market go in wrong direction, I will double every 15 pips. So you can adjust this. You want to make less risk, so you put it 30 pips. Okay, so you double every 30 pips, not every 15 pips. You can start by one lot if your capital is big, for example. Okay, and you just press OK and allow auto trading, and things will move peacefully. I think you need to go to setting. If it's not working, you go to properties, maybe allow live trading. We're missing. Yeah, here it is. And OK. And there you go. We started the positions straight away. So automatically, the market is doing, or the expert is doing the trades automatically on my behalf. All what you need to have is this expert advisor and consistent access to internet, because this expert is consistently reading from the internet on a time basis. Okay, so this is in short how this strategy is working. Again, you can use it not only on like on moving averages. You can do your entrance whatever you want. Like if you're comfortable with a certain indicators and you feel that entering the market is based like is comfortable, but you're having problem on when to exit the market, this is the best solution for you, because 90% of the success in the market is not when to enter the market, it's on how to manage the positions. So many people enter the market, made like 200%, 300% profit, but they don't know when to stop and when to take their positions away from the market and to enjoy their profits. So that's why it's very important to put for you a quick formula about it. And this is my live account. Let me just get back to account, share my history, and it's working like this. So it's always in take profit. I keep doubling, 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 and this is it. And it's shown on my Instagram. You can see the account. I put the username and the investor password. The investor password means you can view the trades, but you cannot amend on them. So you can have a look on how this program is working on my live account, which is I'm sharing with you guys on my Instagram. If you would like to have a look at my Instagram account, you can see it on at Yazan Shakfi. I will write it down here. Just 1 minute. I'm gonna share it with you guys. Here we go. So my live account, you can see here, it's 1348211011, and the password is ABC123. The server is OT Markets Live, and here is my Instagram account. You can always follow me, guys, just to see the latest of the strategies that I'm using. This is our webinar for now. I'm gonna stop recording. Thank you so much. And now I will take all of your questions that I'm seeing on my computer.